Hi, and welcome to the First Time Homebuyer Workshop. I'm going to talk about a few programs here and help you get some information that you might find very, very helpful if you're interested in buying a home. My name is Kevin Garrett. I'm a loan officer. I work with a company called SnapFi. I also go by BKG Lens, and I've been assisting families purchase and refinance homes for over 15 years. Now, I don't know everything, and I'm always learning because in this industry, they're always changing the rules, changing the guidelines, changing the programs. But I'm going to talk to you today about a first-time homebuyer program for those who are interested in purchasing a home for the very first time, okay? If you're in the room with me live, please silence your phone. I want to get to this presentation as quickly as possible. You're welcome to text me. You're welcome to chat and ask questions as this continues to go on and roll. So let's get started, shall we? Now, why are you here today? Well, my goal is to assist you in purchasing a home. That's what my goal is. So my objective is real clear. I want to get you approved to purchase your home in 30 days or less. I want to inform you about the process of getting the loan, educate you about the three most important things about getting your loan approved, and have you set an appointment with me and put you on a path of home ownership. Really that simple. Now, if you're serious about buying a home, pay close attention because I'm going to give you some good information here, okay? Now, again, as I mentioned before, my name's Kevin, and let me get my slide to go to the next page. And I want to ask you guys, why are you listening to this video? I hope that you attended today or listened to the video because you really want to buy a home in the next 30 days. That's my goal, is to get you there. You might want to purchase a home and you might want to learn how. Maybe you're not ready in 30 days or so. Maybe you have some issues you need to fix. Maybe you just want to find out how much you qualify for and get on the path to home ownership. Maybe you want to know how much money you need to buy a home. I'm going to try to answer any and all these questions here for you throughout the presentation. And there's other reasons why you might want to buy a home. And the most important one, I believe, is stability for your family and to be able to start building wealth while the equity being built up as a homeowner. Also, there's a reason why you should want to buy a home is to avoid your landlord selling a home on you or leaving you high and dry, and avoid rent hikes. Because if you stay in an apartment too long, if you pay in a house too long, it's just a matter of time before the seller is going to sell that home or raise the rents on you. Also, a good reason to own a home is the pride of ownership. People are going to respect you and trust and believe you will be respected as a homeowner. And then, of course, there's many other reasons you want to be a homeowner, and all your reasons might be different, and they're all good reasons, and that's fine. Now, here are the three most important things about getting a loan approved. The first thing is your credit. Second is your income and your debt to income ratio. All three things are important, and they will be reviewed when you apply for a home loan. So now, if you have the income with no credit, we need to teach you how to go out and get a secure credit card to get your credit scores improved. I have a solution for that. You'll see that soon. And if you have a lot of credit and your debt to income ratio is too high, you're going to need to pay down some bills. It's really that simple. You want to pay them down to where you're in line to the investor's guidelines, or what we call this 45% back-end ratio. So that's what's really required, is a 45% back-end ratio with most of these first-time homebuyer programs, and you're going to need that to get approved for a loan. And sometimes we can go to 50%, but you got to have a high credit score, typically above 740, and have some other assets in the bank to show the underwriter that you're not a great risk. Now, the process of getting approved, it's really simple. You simply apply. Now, we're going to review your credit report. We're going to review your income documentation to determine what you're eligible for. The things you need to provide when applying for a home loan are the same in every company. And here's what you need to provide: copy of your ID and driver's license, social security card, 30 days worth of pay stubs with a year-to-date income on it, and 3 years worth of W-2s and 3 years worth of tax returns, just to verify that you haven't been writing off taxes or interest on your taxes every year. Also, we'll need 2 months worth of bank statements, all pages. So if it says 1 to 5 on the beginning of your bank statement, we want to see all 5 pages. Typically, the last page is blank, so we still want to see all 5. That's important. Now, credit issues. I've run into more and more people who have credit issues, and that's okay too. We're going to help you get those issues resolved. One of the things that we'll be looking for is bankruptcies. If you had a bankruptcy, it's okay, but it needs to be at least 2 years old, have some kind of established history. Recent evictions, we don't like to see that. Those kind of accounts may need to be cleared before you can purchase and get approved on a home. Collection accounts, if they're depending on the type of collection account, medical collections will not count against your debt to income ratio, but they will cause your score to be low. So it's kind of good to have those cleared up, but it's not mandatory. Let me say that again. Medical collection accounts would not be counted against you in your debt to income ratios, but it's better to have those off than on. The only thing that they're going to do is cause your score to be hindered from getting higher. Student loans will be added to your debt to income ratio, even if they're deferred or if you're still enrolled in school. I recommend that you make the minimum payments on those even while you're working or attending school to avoid that interest going higher and higher and the balance getting higher and higher every month. What we're going to do, we're going to add a payment of at least 1% to your overall student loans. For example, if you have a $50,000 student loan, we're going to calculate a minimum payment of $500 towards your debt to income ratio. So even if they're deferred and it doesn't show in your credit report, and it shows in your credit report that they are deferred, we're still going to apply the 1% rule to your overall student debt. So I encourage you to pay your student debts, even if it's just minimum payments. Now, each credit profile is different, so it's best to go over everything line by line on your report, and I'll cover that with you one-on-one once your credit report is pulled and let you know where your weaknesses are and where your strengths are. Credit inquiries. You're going to have to explain in the last 120 days, sometime 90 days, if you open up a new account. There's a form I'll have you fill out to let me know if you open up the new account. And if you did, well, you're going to have to let me know what that payment is. We're just looking for added payments that you might have to incur every month on those new accounts. Now, I do have someone who specializes in credit repair, so don't worry about your credit. We can help you get the scores you need. It's TMW Credit Solutions. That's Mrs. Warner. She's the founder of Credit Solutions. She can help you get your credit in order. And a lot of the services she provides, credit restorations, business credit, tax preparation, and student loans. And she is here to help you get your credit scores where you need to be before you can get approved for a home loan. So if you have any challenges with your credit, we're going to help you, okay? It's really that simple. Now, here's ways that you can increase your credit score. Now, if you have limited to if you have limited or to positive credit in your credit report, you need to sign up for a secured credit card. One of the best in the industry to boost your credit is a credit builder card. They report a lot more often than regular credit cards, and they would help you get your credit scores increased really quickly. Also, a tip is to pay down your current credit card balance below 39% threshold. To see good results, pay off your credit cards completely, but don't close the account. So have small balances on your account. And don't close the account because an old open account is good as well. So you definitely want to make sure that you pay them off, pay them low, keep them really low. Now, another little tip is to get a self-lender account. A self-lender works just like a CD account, but it reports your payment directly to the credit bureaus. And here's how it works. You make a $30 to $50 payment for the next 12 to 24 months. It reports to the credit bureaus for the next month. And not only will it build your credit, but you also build interest. So you can watch your money grow while you're building credit. So who wouldn't want that, right? You get to save money and get your credit score built up at the same time. So if you have challenges with your credit, we're going to help you get that all taken care of. Now, once you're approved for a home loan for a first-time home buyer, there's several different type of properties you can purchase. You can purchase a single-family home. You can purchase a manufactured home as long as it's on a permanent foundation and you own the land. You can purchase a 1 to 4 unit house. You can purchase a duplex, a triplex, or 4 units for your first home / investment property. That's what I do encourage you to do, because you'll be able to use the income from those other tenants to help offset your income, and that's always a good thing. Now, here's a single family home that you can purchase, and also you can purchase a duplex. Remember, we've talked about different type of loans you can purchase with this home. You can have a duplex and a multifamily home, so you can buy a triplex, a duplex, or even a 4 unit property, all with this first-time home buyer program. Okay. Now, manufactured homes on a permanent foundation you can also purchase, but they cannot be in a mobile home park where you do not own the land. They have to have a permanent foundation. Now, here's an example of a mobile home who's not on a permanent foundation. Typically, something like this, they'll put a skirt over, or you might find these in a mobile home park. We don't allow you to put this type of loan in a mobile home park where you do not own the land. Okay, it's really that simple. Now, there are different types of loans that we offer: FHA loans, VA loans, conventional loans, USDA loans. And the major difference between these loans, either it's insured by the government or it's not. With an FHA loan, you're going to have to put down 3.5% of your own money plus closing costs, and they only require a 580 credit score. With the VA and government insured loans, they prefer a 620 credit score, but sometimes they go to 580, depends on other compensating factors. If you're using a VA loan, it's 100% financing, so you don't need down payment, but you will need to provide your DD 214 certificate from the VA. Conventional loans, they're not insured by the government. You can get those now today with only 3% down with a middle credit score of 640 and above. And the USDA loans, typically for rural areas, it's 100% down payment. A loan needs a 640 credit score, kind of designed for rural areas with populations less than 30,000. And the property must be eligible, so we have to look up that address to make sure it's eligible for the USDA loans. Now, pay close attention because this is important. The different loan types we offer are fixed rate loans and adjustable rate loans. A fixed rate loan is the principal interest remains the same through the life of the loan. What may change is your taxes and your insurance on the loan, on the property. So a fixed rate loan is what we typically offer 99% of the time. An adjustable rate loan is an interest rate that can change every month, every 6 months, or even every year. It all depends on the index it's tied to. But again, 99% of our loans are all fixed rate loans, and we typically don't offer the adjustable rate loans unless you're buying the loan down, their interest rate down, that is, unless you're buying the interest rate down for a year or two. Then it would go back up and turn into a 28-year fixed rate loan. Now, I'm not sure what's held you back in time past, but let me kind of go over this little chart here with you and why you should purchase now and do whatever it takes to buy as soon as possible. In 2017, the rate was really below 3.5%. As you can see from this chart here, interest rates have gone up. And the trend, according to that little channel there, looks like they'll continue to rise. Right now, they're already above 4.8, and if you wait any longer, they might be as high as 6%. And some loans still may be 6%, depending on what type of loan it is. So I encourage you to buy a home as soon as you can, hopefully in the next 30 days, okay? Now, let's go to the next slide. Our goal here is to assist you to purchase a home. And we can do that. We can get you into a home. We can assist you in every step of the process. We can help you with your credit issues. Again, our goal is to assist you in reaching your home ownership goals. Now, some of the paperwork that you're going to be required to bring to any lender, again, it's going to be 2 months worth of pay stubs, 3 years of W-2s and tax returns, 2 months worth of bank statements, all pages, California ID and Social Security cards. Those are the basic documents that are needed right away. Now, if you had a bankruptcy, we may request your bankruptcy papers. If you had a divorce, we may request your divorce paperwork. But everybody's case is different. So we'll ask those questions if your situation warrants that, okay? Now, lastly, what I want you to do after you gather all your paperwork is set an appointment with me. Make an appointment with me where we can go over your situation and get you on the path of homeownership. Now, I do both morning and evening appointments, and the appointments usually last about an hour, depending upon how many questions you may have. Please allow up to an hour and a half to spend with me when you make an appointment. It could be less. Now, I prefer my appointments on Monday through Thursday from 9 to 10:30, 12:30 to 2, 2:45 to 4:15, 4:30 to 5:15. And please go to BKG Lend on Facebook, and you can book an appointment with me. And I'll give you some other links that you'll find helpful here shortly too. Now, I don't typically do Friday appointments, but I do Saturday appointments and workshops on Saturdays on a case-by-case situation, depending on how serious you are, basically. Now, if you make an appointment with me, please bring all your paperwork and be on time. I can always replace my appointments, but I can never replace my time. So please waste your time and not mine. Fair enough? Now, here's some links that you can go to for if you want to apply for a home loan. The very first link, if you know you have good credit and you have a little money saved and you want to buy a home in the next 10 to 30 days, go to that link and apply. The second link, the credit repair link, go to that link if you know you have credit issues, but you want to fix, and you know you want to fix your credit issues before you apply for a home loan. Just start with your credit repair, and then we'll get your scores where they need to be before you can get approved for a home loan. Now, the third link is to get pre-approved if you're not ready right now, but you'll get guidance on what exactly you can qualify for when you're ready. Okay, so you can fill out the form, ask any questions that you want, kind of give yourself an idea and put together a game plan for yourself. Again, you have 3 links. The first link is if you know you're ready to apply for a home loan now, go ahead and click that link or go to that link and apply. The second link is if you know you have credit issues, go to that link, fill out the form, and let's start working on your credit so you can get your scores where they need to be for you can buy a home. The third link is if you want to kind of see where you are, see if you need to fix anything else, or if you want to apply now, you can go to that link as well. But that link is really designed for just assessing where you are. Maybe you're not ready to buy right now. So that's the home buying workshop, and we offer 2 different types of first-time home buying programs, both of which will give you up to 5% for your down payment and closing costs if you qualify. You have to have a 640 middle credit score for the programs. And if you have any questions, please don't hesitate to reach out to me, message me on Facebook at BKG Lens, or you can call me at 559-260-7950. I hope this was informative for you, and good luck to you out there. Again, this is Kevin Garrett. Talk to you soon.